Our guest today is Nick Delaforge. He's a general partner at Planet A Ventures, a German early stage climate tech fund investing in startups that have a significant positive impact on our planet. He previously worked at Earlybird and practices entrepreneurial craft by starting and helping a number of startups. I really appreciate Nick as a human being and for his unique value system. We are very similar in a way. We both live and breathe climate and are obsessed to do something about the climate crisis, even if it moves the needle just a little bit. And that's also why you are here. You are awake and conscious of this enormous challenge to bring society to a whole different place. But what an incredible adventure. And I can guarantee you that if you continue listening to the show and to our incredible guest, you will also move mountains with us. And I truly think you will enjoy this one. We will be humble, vulnerable, and take you behind the scenes of running a climate fund. Let's go. So Nick, I'm incredibly happy to have you on the show. Welcome to the show.
Hi, Johan. Equally happy to be here today.
As a starter, could you briefly describe Planet A Ventures for those that don't know you? Fund size, geography, ticket size?
Absolutely. So Planet A in a nutshell is a green tech fund, meaning that we're not only focusing on climate, but we can also invest into solutions which basically help on a biodiversity aspect, resources savings, and waste prevention. And in terms of fund size, the target fund size is a three-digit million, which we intend to invest across Europe, plus the UK, plus Israel, and with initial tickets between 1 to maybe 2.5 million across pre-seed, seed, and Series A stage companies. And I think what is a bit of a standout compared to generalist funds is that we are not only investing into software, but also into hardware solutions.
Thanks for that. And funny anecdote, just to get the show started. I remember very vividly one afternoon in the fall of 2019 where you and I, with Sebastian Heitman from Extantia, it was called Beyond Black back then, we met at a tiny little Japanese restaurant in Berlin, and the three of us had a pretty incredible and vulnerable moment where we felt desperate to do something meaningful for the climate. And since nobody seemed to care to launch dedicated climate funds to invest exclusively into startups that can take us out of this mess, we thought, why don't we do it? And little did we know that 2.5 years later, this afternoon would be the birthplace of not one, not two, but three climate tech funds: Extantia, Planet A Ventures, and Climentum Capital. How crazy is that? So I wanted to hear your perspective. How did you feel that day? And was it also a turning point in your own journey?
I think what happened back then is really as you describe it. It was this moment of us sitting together, understanding enough about the ecosystem to know that it's going to be a very tough road ahead because of our understanding of how the venture world in general works, and knowing that as an emerging fund manager, it's always one of the very hard things to do to establish a new brand. And I think for the two of us, it was this inflection point in which we started to talk to a lot of people. And while it might have felt like moving sideways a bit, I think what we fundamentally understood is that there was a big need for what we had in mind. Talking to not only people like Sebastian, which were trying to spare ideas on how can more capital, more highly qualified capital flow into the market, but to talk to founders predominantly and really understand their pain points and really understand that the existing general species are, for the biggest part, simply not equipped to fund the necessary innovation. And this is what I remember vividly. And then I think from then on, the goal became clearer. And then it was only a question of which are the right tools to get from A to B.
And it was a question of when. Yeah. And now it's easy 2.5 years later to look back and be proud of everything that's been accomplished. Back then, it looked very elusive. And I wanted to go back for folks listening to the reality check that is fundraising for a VC fund. In my opinion, there are two ways to do it. Of course, with a lot of options in between, but essentially two boxes. One is the traditional path, which is a bunch of VC guys, generally white old males with 10 to 20 years of VC experience, deciding to create a new fund. And they drop their big brands on the table. They show their track record slide. They go on a roadshow to convince the LPs that already worked with. and the run is on. That's sort of option A, and the show is on, right? It just continues, recycling the same capital into the same pockets. And then there's the other way, which with the hustle path, if you will, because when you aren't a product of VC, there's not a ton of alternatives, so you have to hustle your way into it. And could you talk us through the reality of fundraising for a fund with the hustle path?
The hustle path, I love it. Absolutely. And I think before I can talk about this, it's really important to mention that I am not doing this by myself, but I have a insanely powerful team, and this is pure team play up until here. About fundraising itself, someone recently put the picture into my mind of fundraising, or the metaphor of fundraising for a fund being you basically have to assemble an airplane midair. What that means is you have to draw these growing concentric circles of trust points with different investor groups, so that the next relevant group has enough trust points to invest. And so our strategy was, and to say it worked out would be, in hindsight, a very easy thing to say, but of course there were an insane amount of uncertainties along the way, to start to talk to the people that we knew best, which were other founders and potentially family offices. And only after now 2.5 years, we are at a point where we were regularly able to talk to also institutional investors. The real hustle is that for fundraising, you're expected to have what you just said, the track record, on which you then can raise a fund. But to build up that track record, you need capital in the first place. So it's really a chicken and egg problem. And I want to come back to what I said initially, that I'm not doing this by myself, but with a team of very seasoned entrepreneurs and investors. And we literally threw everything we had into the air. Like we went through our entire network. We spent, I would say, every awake minute on trying to figure out how can we crack that nut. And it took an insane amount. And I think what sticks with me is the realization of the necessity of privilege, because this period of thirst. So most of us, we went without a salary for 2 years, and this is I know that this is not feasible for everybody, and I think this is the same way. Investing into existing managers is going to replicate existing behavior patterns, which obviously led towards an economy which is operating outside of the planetary boundaries. We're going to reinforce patterns if we do not make it easier for new managers to get into the market. So you have to be at a certain standpoint in your life to be able to allocate capital, which I think there is reasons and arguments why this should be the case. But then on the other hand, it severely limits us in the perspectives that we can see in the investing world.
Absolutely. So there's two camps, right? One camp is we need a high barrier to entry so that not everyone becomes an allocator, because we need operators. We need to make sure there's not an imbalance between all the people that have the money and want to deploy it and the few that are operating. But the other camp is also we need more diversity. So how do we enable more outliers, female founders or female fund managers, diverse backgrounds to become fund managers? Because it's not only good to empower a broader set of people to give equal opportunities, but they also tend to fund and give opportunities to the same diverse people. It's two birds with one stone. Any thoughts to share?
So I sat next to a female founder, one of the strongest founders I know, at a conference in Zurich last year. And while I was sitting next to her, she was preparing a LinkedIn post, furiously posting about the allocation of capital that went into female only or partially female founding teams, which was only percentage points of the entire capital. And then I said to her, I completely understand your frustration, but if I match that with the data that we have from our deal flow, this is not disproportionate. This is what we are seeing in terms of male and female teams. And by no means is that an excuse towards investors that they should continue investing with the pattern that they are investing in. But what I'm pointing towards too is a very interesting analogy to also the climate tech world, which is that we are living in a very complex system. Like to systemically change the amount of female founders that you see, for example, like that's only one aspect of diversity, of course. You also have to establish better role models. You have to have, this starts in early education to make this a more appealing career path for women. And I think why this is unsatisfying is because it's usually a very complex answer, and it can't be that there is usually no silver bullet. And I think that's a big that is in synchronicity with what we're seeing in climate change. It's not about either flying less or stop eating meat. It is usually all of the options combined plus a lot more.
And going back to the struggle of raising a fund, could you share a story that is very vivid? Would you have any insight or suggestion for emerging fund managers to really optimize their fundraising? Any one trick that has really worked for you guys you'd like to diffuse?
So we've been observing this quite in detail over time, and we've been getting a lot of feedback around track record, around how long we as a founding team know each other and have been working with each other, around portfolio not being in existence, around brand, around strong competition, and so on. And after now 2 years, I would say most of that is excuses. The thing that had by far the biggest impact on our fundraise is momentum. The moment that LPs started to feel that there is that it might be close, and it might become tricky to get into the fund, that is really where things turned upside down. Where really for us the momentum changed from headwind to tailwind. And nothing but that.
But does that mean that you turn previous no's into sudden yeses? Or is the fresh pipeline that is entering the funnel that say, oh my God, this thing is closing in 4 weeks, we need to get in now?
Both.
Really? Okay.
Yeah.
That's good to know.
Yeah, and especially on the ones that have been waiting. There is of course a lot of LPs, as we just talked. There is no real incentive to come in early, and especially for the ones who've been with us along the journey for a year or so and have been observing what we do. This has been the biggest push to them to very quickly get to a decision, and a positive one in most cases.
And again, to reemphasize, so you say unchanged team, unchanged value proposition, vision, material, just the terms, which is timeline compressed. And here's the open window now.
And remaining allocation.
And remaining allocation. But you cannot lie on that front. You need
Absolutely.
to be transparent.
Absolutely. No. And I would
so there's no shortcut in a way.
No, there's
you need to go through that pain of sort of getting, the logarithmic progression, and then only when you get to that tipping point where there is sufficient capital allocation and proof can you rush through the final mile.
Absolutely. Fundraising for a venture fund is not a linear thing. It is not that, let's say, you aim at raising the fund in a year and a half, 2 years, whatever the time period is, and that you will see a linear increase in commitments, but that it's more so an exponential or a step function. And this is important to keep in mind. You might not immediately see the outcome or the output of your work, but if you're lucky, then at some point the flywheel has accelerated to a point where this becomes rewarding. And I think resilience really was the name of the game for us, to really keep that in the back of our heads, and to trust that with the thesis that we were setting out with, that this was something which had the potential and which is the right thing, and we're still convinced of that, of course, that it's the right thing to do it, and then to maintain with that. And I think so in the trenches and with the many no's that we got, to keep that in the back of our head and still continue to push.
Resiliency and consistency. I would tend to agree with that. It is not a 3 months. Today, an attractive founder or an attractive startup can raise a round in 3 to 4 months. You cannot raise a fund in 3 to 4 months. It's just not possible. It will at least take a year or two, and probably even longer than what you initially expect. So the advice that I would make is breakthrough impact, and there will be a lot of micro impacts. Try to make sure it doesn't, it's not fatal to the airplane that is flying me there.
Mm.
I wanted to switch to. Yeah.
And
Sorry, go ahead.
quickly, in addition to that, we both, I think by now, know why that is, because with a startup, you're able to build momentum. You're able to say, okay, this is the round, this is happening now, or in 2 months' time, and if we are right, then you will never be able to buy into this company at this price again. While for a fund, if you're coming in the first closing or in the last closing,
Sure.
Hardly matters. It's maybe some equalization fees, but that's really it. And so, and even prospectively, to look at a second fund and say, yeah, probably there is still space in the second
That's
fund.
right. There's still an entryway. That's right. We're not all in the Sequoia Andreessen category where fundraising is no longer relevant, and the window of opportunity is very narrow for LPs to join. And there's something else just to wrap this topic. I realize how much of a human element this is. When you're fundraising for a startup, it's very much product or tech oriented, or it's very much facing the problem. When you're raising for a fund, it's just humans talking to humans, and they're facing human problems, meaning that the team problems that you might face, right? The friction that there is within the team, so that you do the sacrifices and you're willing to change and you're willing to optimize the team for this kind of long journey is really the name of the game. But it's also a human side on the LP front, because they're investing in teams above all. You want to get moved. You want this sort of gut reaction. It's not just a brainy thing. It's very much human to human.
Mm. Absolutely. In the beginning, you're raising nothing but an idea on a slide of PowerPoint slides, on a bunch of PowerPoint slides. And I think what helped us to most, and then I'm really happy to let this go, I think what helped us most was, no matter how hard it was, to somehow be able to show what we would like to invest into. So to build a warehouse portfolio of companies that we invested in the beginning, tiny amounts of money into our own capital mostly, that really was helpful to make it much more tangible what we had in mind with Planet A.
There's the notion of vulnerability again. It's not surprising that VC historically has often been the private turf for men and for testosterone, so not a ton of humility and vulnerability. But as we enter a new phase for VC with a new generation of fund managers like you and me, we need to open up and bring more transparency to crack this box open. And if we speak up, there more will. That's the only way to change VC from the inside. You told me that it's also important to take care of yourself along the way. And this is something that a lot of people are talking about on podcasts, very public about it. But it goes back to the notion of climate anxiety, which dropped as we planted that seed to me about 2 years ago. I didn't know the term. I thought it was very clever, because that definitely felt that way, and I know a ton of people around me that felt the same way, especially during COVID time. So what did you mean by that exactly? To take care of yourself?
My aspiration, with all the humbleness that I try to have, is to be an ever so small wheel in a movement that contributes towards building a sustainable economy, and an economy which is using less resources than we have per year. And by taking care of myself, I mean that this is very urgent, and this requires a lot of velocity. But at the same time, that I don't help anybody if I do this for a year and then have to say, okay, I can't do it anymore. And I personally had a moment last year where I had physical symptoms of really noticing, okay, this is my limit. I've reached my limit, and not with the conviction of ever saying I'm smarter, better, more resistant, more resilient than anybody, but simply ignoring earlier warning signs like tiredness or so, because of that climate anxiousness. And I straight up knew that I was going down that path, and I think then I had this physical symptom, and that was a very important lesson to me. And by now, around half a year later, I'm at a point where I'm able to do this in a much more balanced way. So I have my routines, I think, yeah, go ahead.
Is it because you tap into the limit of your energy, right? The batteries, you depleted your batteries so low because it is a taxing process to fundraise for a fund. There's uncertainty along the way. You just don't see the light at the end of the tunnel, and it's just much more complex. And you deal. Is that more because of that, or is it really seeing the wall that civilization as we know it is facing, and that no one seems to really care, or that it's still business as usual?
I think it's both. I think it's continuously facing and learning more about the consequences of climate change and global pollution, which go much beyond climate change on the one end, and then also understanding how dire the situation is and like how much more we have to do. And on the other hand, to what I said earlier, that we threw everything into the air. So I talked to all my friends, and they somehow found an involvement in Planet A. And of course, there is also simply a lot of responsibility. And I think that the combination of the two of them really made and makes us also you push towards limits. And I think what changed for me is that I don't want to push toward my limit. I want to push to 90%, 80% of it. But I want to be able to do that for the next 10 years, 20 years, 25 years. Because we have, similarly to our investment horizons, we have to have a longer breath than simply to do this for a couple of years.
Yeah, I can chime in here with my personal perspective. I definitely felt a big low right after COVID hit because everything was put on stall mode. Just capital stopped being deployed. There was still the uncertainty with the potential Donald Trump term 2, so it could have been really, really, really nasty, really quick. And I went this a deeper path of really questioning whether what I was trying to accomplish was even worth it if civilization was on the brinks of collapse. What saved me in a way is just really taking a step back, as always, right? Always helps. But looking at reading sci-fi, reading climate fictions, looking at a really broad horizon where those guys are not talking about the next decade, they're talking about the next century. And it reminds you that civilization goes through a bumpy road, and it actually could be the biggest opportunity of our lifetime because we know that we have a ton of problems as society. We know there's inequalities, it's just not fair. We know that the system as we know it is extractive as fuck. And there's so much that needs to be changed that it seems almost unavoidable to have a reset. Now, we want that reset to be as less painful as possible, of course, for us, for this generation, but it needs to be quite brutal in a way. And the goal of our funds and the community as a whole, climate, is to make sure that the path is not fatal, because there is a chance that we're be going at 4 degrees, 5 degrees, 6 degrees if it's business as usual. So we want to ensure that we remain at 2 to 3 degrees, because 1.5 seems already a lot of past, and we need to be that. But it's also to create, and I don't want to be a defeatist, right? But we want to create a path that is as least brutal as possible. There's still a chance to invest, and it's just incredibly rewarding to talk to entrepreneurs. They're just equally value oriented as we are. They have big hopes. They want to take CO2 out of the air. They're creating innovation that's just mind blowing. And even just being around this community is the best way to recharge your batteries, I find for myself.
I fully agree. And I mean, I very vividly remember the book that you wrote about how can the future look like. And I think this is the main task that we have at hand, right? To explore future scenarios, and then from that derive how can we get there? What are the necessary steps to get to exactly that scenario? And I think this is, as you say, this is recharging as hell.
Now, I want to penetrate the brain of Planet A, not just you, but you as a team, and understand maybe one area where you've completely changed your mind over the last 2 years, just to inform us how you've been thinking and how you perceive the ever-evolving climate tech space.
One area we completely changed our mind. So there is a couple I could name. So one is in food tech. So
Mm-hmm.
I'm under the conviction that if, let's say, a lab-grown meat startup um, talks to us and asks us to become the lead investor into a round, I simply would not do so because, again, of adverse selection, because I must assume that they've talked to every food fund which is out there, which is like in the stages that we invest, definitely more helpful than we are. And they've said no for whatever reason. And I know that a dedicated food fund is able to spend much more capacity on building a dedicated thesis on the underlying tech or team than we would ever be able to do. And so for us, when we look, for example, look at food, it's something we would only consider if this comes with a lead investor from dedicated food.
As
Then,
opposed to what?
no, with a
Meaning,
dedicated.
what are the areas that now you concentrate on?
I mean, there is this is not a hard exclude, so we still look into it. And there's of course also things like anything happening in agtech, for example, analytics for carbon sequestration or carbon, soil carbon, and so on. Actually, which is another topic on which we recently conducted a deep dive, which was quite impactful because we found that to contrarian belief, carbon sequestering through carbon soil is very, very likely not as efficient as we think, because recent studies have shown that yes, while you're able to sequester a lot of carbon in the more shallow layers of the soil, the carbon which is stored below in some cases evaporates and gets back into the ecosystem. So there is like an equilibrium effect between the two layers, and so that in order
It's
to
only a
really
temporary gain.
it's a temporary gain, and sometimes
A short-lived gain.
Sometimes it's stored like it continues to be stored at deeper levels, but it points us towards the fact that our analytics software or sensors, they also have to take that into account. It's not enough to only do that on a high level. We also have to dig deeper.
Nick, I think I would love to jump into our rapid fire round if you're up for it. You know the
Sure.
concept.
Absolutely.
I'm going to ask 2 quick questions with 2 answers, option A or option B, and I would love your answer in a brief sentence. Question number 1 is generalist versus specialized. How would you categorize Planet A Ventures, and what kind of funds do we need more from now on, in your opinion?
So we are definitely a generalist fund in the space of green tech, and I think what we need more of is specialized funds with very deep chemical expertise. I think, and you've seen the graphs about over allocating into micromobility and slightly into energy, but the real like some of the real drivers of impact are still left out in the chemical and manufacturing world.
Now, contrarian versus consensus decision. How do you run investment decisions internally? And how does your voting mechanism work?
We have to find consensus in our ICM. So not complete consensus, but the majority of our ICM has to vote for a certain company. Everybody can veto, so everybody has the possibility of blocking a deal, but as an ICM, we have to, as a majority, come to a positive result.
So with 6 GPs?
Yep.
Is that correct? 6 votes, you need at least 3 of them to provide a okay, or is that a score system?
It's 4. It's at least four positive votes. So we have basically have 4 different voting options. One is a veto, then is rather no, then we have rather yes, and yes with conviction. And at least the deal lead has to vote with yes with conviction.
And is that a risk to block contrarian views? If you come up, Nick, with something that you find really, really moonshot or something, an outlier deal because you love the founder, do you think there's a risk of blocking that at the IC level?
We've been discussing some moonshotty deals, and so far this hasn't been the risk. There is a lot of trust amongst us that if somebody really wants to go for it, then also we are able to bring the necessary arguments to the table. And if not, then we wouldn't bring it to an ICM.
So let's move on to the next one, which is 1 enormous fund versus 20 medium funds. What is more likely to drive more CO2 reduction?
So I would say the small funds, simply for the dynamic that we initially talked about, that repetitive behavior is going to repeat existing patterns, and what we need is to break out of how we've done it for the past 100 years. And so I think the risk that the big fund at some point gets corrupted by the idea on leaving impact a bit out of the equation and do investments which sound more appealing and might not have a direct positive impact, it's too big. And I think with smaller funds, we see a higher potential for innovation beyond a higher potential for systemic innovation, because I think the investment world itself needs to change next to, of course, the technologies and business models that we're funding.
All right. Thanks, Nick, for coming on the show. It's been great to have you and to get your human perspective. And to you all, don't forget to subscribe if you want to listen to more amazing guests. And thanks for tuning in.